one of the most important questions I really liked about the bank was that, uh, okay, so this gentleman called Pranay Delia, if I'm not wrong, if I remember reading it correctly, he mentions that I have been a shareholder for the past 8 years. Okay, if I have been a shareholder for the past 8 years, I'm not experiencing as much growth in this stock versus the same FD rate that your bank is holding. So if the FD rate is like 7.5%, he claims that the bank is only giving at least nothing less than about 5 to 5.5% on a year-to-year basis. So when we are dealing with such kind of a growth, the bank is not necessarily giving confidence to the shareholders who are investing into the bank, right? So what I want to mention is the CEO was very adept in answering and countering all these questions with a new resurgence, with a new kind of confidence for the shareholders to continue remaining within the bank in itself. They want to they've given that kind of confidence, saying, okay, listen, these are our priorities. There's a new management right now. I understand that I'm a part of the new management. There are new kinds of people being hired into the bank. We are trying to make sure that a new set of people will be hired, and we're going to empower them to remain in the bank, retain them, and focus on making sure that we remain profitable for the next couple of quarters at least. So please stay with us. So what are those parameters, right? The new CEO mentioned very clearly what is his priorities. He mentioned that RAM, retail, agriculture, and MSME. These are the three priorities. Now, what is this priority over here? Why is he focusing on these three priorities? Let's focus into them, right? Retail loans are massive, are majorly they are subject. The interest rates are mostly subject to credit worthiness of the company, to credit worthiness of the individual taking the retail loan, and it depends on the product in itself. Retail loans, we have household loans, we have a personal loan, we have vehicle loan, we have gold loan, we have all these kind of product lines, right? So retail loans are different. They are more subject to the kind of product versus the credit worthiness of the individual in itself, right? The second is agricultural loans. What I've noted is that agricultural loans, the interest rate is at anywhere between 8 to 10%. And then MSME loans are the most profitable loans for the loan book of any bank, which is anywhere between 8 to 25%. So the more loans they're giving in the MSME sector, the more likelihood that they would be more profitable over the long run. So what I was very glad to see with the management, with the MD and CEO right now, who's been just recently hired, and as of this morning, he's been hired as a full-time CEO and MD right now. He mentions very clearly with a very strong sense of impetus and focus that RAM, retail, agricultural, and MSME are the kind of loans that we're focusing on for the next couple of quarters when I'm the CEO right now. So with that in mind, he starts beginning his guidance with renewed focus and renewed judgment and renewed, renewed confidence in a way. In a way, when I was reading the con call, so I was quite impressed with that. So his three priorities were enhancing the retail book, the MSME book, the MSME growth, and then he wants to expand, have more diversified portfolio. Okay, when we're looking at a diversified portfolio, he wants to make sure that one loan book is not giving them a lot of risk. It's very possible that right now gold loans are increasing. It's very possible that with more exposure to gold loan, there will be a lot of risk even to the gold loan, a lot of risk to the gold in itself, right? You're expanding your entire loan book towards gold, you can experience a lot of risks associated with it. So what he's trying to understand is he wants to expand and diversify his loan book in such a way that he can remain profitable over the long run without expressing too much exposure to one certain product line within his entire advances book, right? So having said that, he wants to make sure. I was quite impressed with the fact that he was very clear of the guidance that he wants to share for the next couple of quarters, and I've already mentioned this a couple of times by now. What is that guidance, right? What is that guidance? It can be devoted into four buckets. Sorry, right? First is CASA ratio. Okay, so what is the CASA ratio? Let me explain it a little further. When we're dealing with a bank, right? A banking business is majorly focused on the loans and the advances, right? So to remain profitable for a bank, they want to make sure that the deposits that are coming into the bank is cheap. As long as it's cheap, it can lend that money to someone else It wants to make sure that it can lend that money to another third party at a higher interest rate, so that the difference in the interest that they're paying to the individual who is investing into the bank by way of deposits versus the interest that they're gaining from a loan, they can remain profitable that way, right? So they want to make sure that CASA ratio is increasing every month, right? They want to make sure that quarter on quarter, the CASA ratio, which is the amounts of current accounts, the amount of deposits in current accounts and savings accounts is increasing every month, right? The second bucket is asset quality. They want to make sure that there are more loans which are being restructured in such a way that the people who have taken the loans are repaying them, and they want to make sure that the net NPAs and the gross NPAs are reducing every month, quarter on quarter and every month. They want to make sure that both these ratios are reducing, and they want to make sure that they can also improve the provisional coverage ratio. What is the provisional coverage ratio? So in the event of a loan progressing into an NPA, they want to make sure that there's sufficient amount of money within the bank's assets that they can provision for the NPA to be let go of, so that they can start afresh and give new kinds of loans to people and remain profitable for the entire bank. So they want to make sure that net NPAs are reduced, the provisional coverage ratio is increasing, and the third bucket would be advances, and the fourth bucket would be deposits. Having already described advances and deposits a couple of minutes back, I want to make sure to explain what are the ratios attached to both these buckets. One would be the cost to deposit ratio, and one would be the cost to income ratio. Both the ratios are extremely important for a bank to continue increasing. Okay, they want to make sure that the amount of costs for a deposit is reduced. As long as it's less, the company remains profitable. Similarly, for cost to income ratio, there are miscellaneous expenses for a bank, right? Versus the amount of income that they're getting through the advances, right? The monthly income or the quarterly income that they're getting through an advance. They want to make sure that they're profitable in both these ratios. Are they being profitable or not? And if these two ratios are being profitable, the direct consequence is that the net interest margin, the net interest income, the return on asset, and the return on equity, all of them are improving consecutively, just because the cost to income and the cost credit to deposit ratio are both improving. So with these priorities in mind, the current CEO has expressed desire that these numbers are of top priority for any bank to continue focusing on and remain profitable for the next couple of quarters. So they're dealing with a tough situation right now. They're dealing with a very tough situation where the management has resigned. They want to have a fresh resurgence of new kind of management coming into the picture. The employees continue to remain motivated to progress and work for the bank. So there's a lot of restructuring of governance within the bank that's trying to happen right now. So to invest confidence for the shareholder back into the company takes a lot of courage for the CEO to continue investing that courage back into the company. So I think that's what he was very good at doing this time, and I'm very much looking forward to see what he's capable of doing in the next couple of months. And I'm glad to say it should do well. And I'm very confident about it, just because the management says so, and I'm hoping it should do well. Until next time.